You're welcome to my channel. So we are still continuing with self-review threats, and in the previous video we ended on the taxation services like tax planning and handling tax disputes with URA. So if the audit firm helps the audit client in tax planning or in calculation of the taxes that will be used in the preparation of financial statements, it may impair their objectivity, because if they are the same people that calculated the tax that was included in the financial statements, and then they are the same people to evaluate those financial statements, they may not be able to detect errors in their own work, or even when they detect, they may not say it out or bring it out. So it will impair their objectivity. So the safeguard that we have here is that an audit firm should not prepare tax calculations for the purpose of preparing financial statements for an audit client that is a public interest entity, except in emergency situations. So in case it is a public interest entity, an audit firm should not prepare calculations for such an entity when those calculations are for purposes of preparing financial statements, except when it's an emergency. I said we shall be looking at the emergency situations. Then the second safeguard is management should take responsibility for preparation of tax returns and tax planning. Like, instead of using an audit firm to do it for you, you should task your management to take up that responsibility of filing for tax returns and tax planning. So those are the two safeguards in case of taxation services, like tax planning and handling tax disputes with URA as a threat. Then another threat we have is internal audit services. Internal audit services. Remember, we have internal auditing and external auditing. So internal audit services are mainly done by the internal auditors, which can be management and all that. So in case you hire an audit firm to come and do the internal audit services, and then you hire that same firm to do external audit services, like, they will be evaluating their own work, whereby they will not be able to point out their own weaknesses, because they, like, no one can point out their own weaknesses on purpose. They'll lose their reputation and all that. So it's like MTN hiring KPMG as the internal auditor and then as the external auditor at the same time. There will be confusion. Yeah, so internal audit services, the effect is that the auditor may not point out any weakness in their work for fear of being penalized or losing reputation. Then the safeguard is that an audit firm's personnel should not assume management responsibility when providing internal audit services to an audit client that is not a public interest entity. So they should not assume management responsibility. They should just do what they are supposed to do. Yeah, and leave the rest to management. Yeah, we shall see it in Note C. We shall see the differences here between management responsibility and then the responsibilities of the auditor. So the first safeguard is that the audit firm's personnel should not assume management responsibility. Then the second one is that an audit firm should not provide internal audit services to an audit client that is a public interest entity if they relate to accounting systems that generate financial statements. So an audit firm should not provide internal audit services that have any relation with the accounting system that will be used to generate financial statements. So they should either task management to do that, or they should hire another firm, but not the same firm. I hope you I hope you get what I mean. So those are the two safeguards. The auditing firm personnel should not assume management responsibility, then they should not provide internal audit services to the client, that is a public entity, if they relate to the accounting systems. If they do not relate to accounting systems, it's okay. But if they relate to the accounting systems that will generate the financial statements, it's not okay. So that is it. Then the last one is IT systems. IT system services. Like if you hire if MTN hires KPMG to design the IT system, and then at the same time to evaluate their financial statements. So the same auditor may not be may be reluctant to identify the weaknesses in his or her own system. Like if they're the ones that design the system that is being used in the organization, maybe the accounting system and all that, like if they designed it, so they will be reluctant. Allow me change this. So the same auditor may be reluctant to identify weaknesses in his or her own system. If you hire KPMG to design your accounting system and then you hire the same firm to do the auditing for you, they will not be able to identify weaknesses in their own work. And even if they do, they will not say it out. Yeah. So the safeguard here is that such services can be provided to an audit client that is not a public interest entity, provided that the client acknowledges its responsibility for the internal control system. So they can offer such services to an audit client that is not a public interest entity. Then the second safeguard is that an audit firm should not provide services to an audit client that is a public interest entity involving the design of a significant part of the internal control system for the client's accounting records of financial statements. So they should not design for a public interest entity the system that is related to preparing financial statements and all that. So those are the two safeguards for internal system services. Yeah, they mainly set this in objectives. Yeah, so those are the self-review threats. I gave you the formula in one of the previous videos. So we are going to look at the notes that we've been talking about, note 1, note 2, and all that. So not note 1, note A. Yeah, note A, we shall look at what is considered as management responsibility by the code. So what is considered as management responsibility? First is that management should set policies and then the strategic direction, like what they want to achieve in the long run. So they should set the policies and then the strategic direction and how they will achieve their goals and all that. Then directing and taking responsibility of the actions of the entity's employees. They are supposed to direct employees and take responsibility of their actions. Then authorizing transactions like sales, purchases, and all that. Then deciding which recommendations of the firm or third parties to implement, because auditors always give recommendations on the internal control system of the firm. So management has to decide which one to implement and which one to leave out, because they can't implement everything. So it's their responsibility to decide which recommendation to implement and which one to leave out. Then another responsibility is taking responsibility for designing, implementing, and maintaining internal control. Internal control is like how things are done within the organization. Yes, so they design how things are done, like in case you make a sale, this is what you are supposed to do and all that. You're supposed to record it here and there, something like that. Then put a stamp, give a receipt. That's what we call the internal control. Like in case you are supposed to make a purchase of something, you're supposed to first get authority from here, then do that and that. That is the internal control. Yeah, how things are done within the organization. So management is supposed to take that responsibility of designing, implementing, and maintaining the internal control. Then they're also supposed to take responsibility for preparation of financial statements in accordance with the International Financial Reporting Standards. Yeah, so that is what is considered as management responsibility. Setting policies, directing and taking responsibility of employee actions, authorizing transactions, deciding which recommendations to implement, designing, implementing, and maintaining the internal control, then taking responsibility for preparation of financial statements. Then note B is the emergency situations, because we were mentioning that this cannot be done except when it's an emergency. So emergency situations may be when only the firm has the resources necessary or the necessary knowledge of the client's system and procedure to assist the client in the timely preparation. Like some things are not allowed, but they can be allowed in an emergency situation. An emergency situation is like when only that particular firm has the resources that the company needs or the knowledge of their system. So it's what we call the emergency situation, when they cannot find anyone else to do it for them. Yeah, so these are the emergency situations. Like those who provide the services are not members of the audit team. Like in emergency situations, those who provide the services are not supposed to be members of the audit team. Then the services are supposed to be provided for only a short period. Then the matter is discussed with those charged with governance. So those are the three conditions for emergency situations. Those who provide services are not supposed to be members of the audit team. Then the services are supposed to be provided for only a short period. Then the matter is supposed to be discussed with those charged with governance. Then note C, we look at the examples of internal audit services. that involve assuming management responsibility. So, internal audit services, we have setting internal audit policies or strategic direction of internal audit services. Secondly, directing and taking responsibility of the entity's internal audit employees. Thirdly, deciding which recommendation from internal audit services should be implemented. And thirdly, issuing internal audit reports to those charged with governance on behalf of management. So those are the three notes. Note A, B, and then C. Yeah, and that is all about the self-review threats. Thanks for watching. Do not forget to subscribe, like, comment, share with your friends. In case you're understanding, please let me know in the comment section, and in case you are not understanding, let me know in the comment section. Yeah, so that I can see what I can do about that. Yeah, thanks for watching.